So which FTSE travel stock should be worth looking at now that the travel rules have changed? Hello, I'm Rachel Jones and you're watching kalkinemedia. The travel rules set by the UK government have seen major changes. A fully vaccinated person can travel without taking a PCR or lateral flow test, which will reduce the travel costs by around £100 a trip. Also, different categories like green and amber lists will be merged into a single category of low-risk countries. At the same time, the number of countries on the red list might also be reduced further from the current number of 62 countries. However, travelling for those who have not had the vaccine might get tougher. Travellers from the red list countries will have to spend 11 days in the quarantine hotel, and that's at the cost of £2,285, while travellers arriving from the low-risk location must home quarantine and be required to take 2 tests. They're in force ahead of the October school half-term break, which is a high travelling period. This is sure to benefit travel-related stocks, so let us look at FTSE-listed travel stocks that could be positively impacted. First off, Ryanair Holdings. Now, this FTSE 250 listed airlines company operates across major destinations in Europe through its fleet of over 450 aircraft. The company expects higher traffic growth over the next 5 years and has raised its 5-year growth forecast from 33% to 50%. In addition, the airlines expect passenger traffic to rise over 225 million by March 2026 from pre-pandemic levels of 149 million traffic. To achieve the desired growth rate and capture market opportunities, the airlines plan to buy an additional 210 aircraft over the next 5 years. Another airline, International Consolidated Airlines Group, could be worth watching out for. The group owns British Airways and operates its services across Europe and other major destinations worldwide. The company has seen a recovery in passenger traffic after an ease in the restrictions. The company operates several airline brands, and any positive news for the airline sector will certainly benefit the company's stock. The company expects a recovery in passenger capacity to be at 45% of the capacity back in 2019, especially on the transatlantic route in the third quarter of this year. Moving on, we have budget airline EasyJet. They fly to more than 30 countries with a fleet of over 340 aircraft. The company reported passenger capacity at 17% in the third quarter, which is expected to rise to 60% of 2019 levels by the fourth quarter. To accelerate the recovery and protect from downside risks, the company plans to garner £1.2 billion through a rights issue. Now, if you like this information, please like, share and comment on this video and subscribe to our YouTube channel. You can also press the bell icon for notifications for our latest videos. For more updates, log on to our website kalkinemedia.com. I'm Rachel, signing off for kalkinemedia.